Hi and welcome to this episode of On the Money. This year's federal budget outlined plans to tackle the cash economy, which costs an estimated $15 billion in lost revenue. The plans introduced the Black Economy Task Force, which is set to hand down its final report in October. Proposed solutions in the interim report include access to Australian government procurement opportunities to be limited to firms with a good tax record, tax and other incentives for small businesses who adopt and invest in non-cash business models, tax literacy education, possible cash payment limit, and lowering the GST threshold. Watch this space over the next few months to see if any changes are implemented. Keep an eye out for the new $10 note in circulation. Released in September, the new note features incredible security features in the clear top-to-bottom strip to catch scammers more easily. Other features include a rolling color effect when the note is tilted, clearly defined multicolored fine line patterns on both sides, serial numbers viewable under UV lights, and a tactile feature so it can be easily recognized by vision-impaired members of the community. The older versions of the $10 notes are still in circulation and accepted in transactions. Last financial year, Australians made work-related car expense claims that totaled around $8.5 billion. A significant amount of these claims were made through the cents per kilometre method, which doesn't require detailed evidence for claims up to 5,000 kilometres. Car expenses incurred performing work duties are generally deductible, but trips between home and work cannot be claimed without good reason, such as carrying bulky goods or equipment. The ATO has now outlined 3 golden deduction rules. You have to have spent the money yourself and can't have been reimbursed. The claims must be directly related to earning your income, and you must have a record to prove it. A growing number of Australians are choosing to opt out of private health insurance as the financial incentive is diminishing. Currently, anyone earning more than $90,000 a year who doesn't have health insurance will pay extra tax in the form of the Medicare levy surcharge. This is also a lifetime health cover loading that increases by 2 percentage points every year a person delays taking out private health insurance after the age of 31 and until they're 65. Despite this, rising premiums and bracket creep are making it cheaper to pay the Medicare levy surcharge than investing in basic health cover. The federal government has passed a new Fair Work Amendment, Protecting Vulnerable Workers Bill. The new bill significantly boosts fines for employers attempting to force employees to pay back their wages in cash, and it makes franchises and holding companies culpable for breaches of the Fair Work Act if they're found responsible. What's more, the Australian Labor Party successfully had an amendment made to the new bill that reverses the onus of proof onto the employer regarding claims for unpaid wages where the employer has not produced wage slips or employment records. In September, new laws came into place that allow small and micro businesses access to additional opportunities to raise capital to grow their business. Crowdsourced equity funding allows businesses the opportunity to raise up to $5 million a year, with individuals allowed to contribute up to $10,000 per company per year. As opposed to crowdfunding, whereby investors receive a business report or a sample product, crowdsourced equity funding means investors become shareholders of the business and expect a financial return on their investment. Additionally, there is more good news for small businesses, with the amendments to the Competition and Consumer Act 2010, which passed in August. These amendments make it harder for corporations with substantial market power to engage in conduct with the purpose, effect, or likely effect to substantially lessen competition in markets in which they directly or indirectly participate. A report released this year by the ATO has shown a $17 billion gap in Australian superannuation that's accrued over the past 8 years. As a result, the federal government is cracking down on employers not paying the mandatory 9.5% of employee earnings to a super fund of their choice. Measures to close the superannuation gap include asking employers to submit monthly reports via single-touch payroll so the tax office can detect non-compliance, and granting the ATO power to seek court order penalties where employers are caught repeatedly failing in their super obligations. That wraps up this episode of On the Money. If you'd like further information about these or other accounting issues, we welcome your call or email. See you next time.